Hello, everybody. Welcome to today's webinar brought to you by Warrant Malaysia and managed by our company LifeChamp. Today, our webinar title is Trading Warrants in 2023, Trick or Treat. So welcome, everybody. My name is Shen Chu. I'm the moderator for this session. Now, warrants are leveraged financial instruments. If you get the direction right, it may help you to amplify your returns. And if you get the direction wrong, it may help you to destroy your equity, okay, much faster than you can imagine. All right. So this is a very leveraged tool that you really need to master before you trade it. And today we're going to examine and explore how do we use warrant effectively. And on top of that, we're going to learn how do we gain foreign market exposure through locally listed warrants. So before we begin, as usual, disclaimer, whatever is shared in this session is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. All right, today we are very honored to invite one of the renowned issuers of warrants to come on board to share with us more about structured warrants. And he's none other than Mr. Andrew Lai, who is the warrant specialist from RHB Investment Bank. So allow me to briefly introduce him. Okay, Andrew is the RHB Investment Bank in-house warrant specialist. He has 8 years of experience in the equity derivative team. He has also done many structured over-the-counter derivative transactions for corporates, financial institutions, and ultra-high net worth individuals. He has covered clients from Malaysia, Indonesia, Singapore, and also Hong Kong. So without further ado, let me introduce Andrew. Andrew, how are you today?
Hi everyone. Good today. It's
all right, cool. Let me unshare my screen and hand the control over to you.
One second, yeah.
No problem. So one of the focuses today is also to zoom in to see how do we assess the Hong Kong listed shares through the local listed structured warrants. All right.
Yep.
So
okay. So I'll take it over. Well, we've gone through the first few parts. Standard disclaimer as well. I would not be making any recommendations on specific stocks and things like that. This is just more an educational session for all of you guys to learn more about warrants, know the pitfalls, and also just a kind of an introduction of how you can trade and gain levered exposure to Hong Kong shares on the Bursa Malaysia itself, right? So I think he's gone through my introduction already. Yes, I've many years experience in the equity derivatives market, and actually a lot as well in the OTC, over-the-counter derivative market. So hope today will be an educational session for everyone and we all learn something new, yeah? Okay, so let's get straight into the basics. First of all, just to make sure everybody's on the same page, what is a structured warrant? A structured warrant is an equity derivative instrument that's generally issued by investment banks. Its value is usually, or not usually, but it's always derived from a mother share or a counter, right? So for example, let's say you have a TNB warrant, the value of the warrant will move in tandem with the TNB mother share. Now, there are two main types of structured warrants on the market, and that is a call warrant, which is for investors with a bullish view. That means if you think the share price is going up, the call warrant is what you're looking for. And as well as to a more limited extent, the put warrant, which is a bearish view. So the value of a put warrant is inverse to the value of the shares. That means the share price comes down, the put warrant's values goes up. Now, generally in the market, a large majority of the warrants you'll see are call warrants. It's mostly for bullish views, right? So then we see what exactly is a structured warrant, right? A structured warrant is basically for call warrant, gives you the right to buy a certain share at the exercise price at maturity, and a put warrant is the right to sell a certain share at the exercise price at maturity. Okay. However, of course, when you say buy and sell a mother share, you don't actually take possession of the shares. It will be a cash settled structure. What do I mean by this, right? So since call warrants are by far the most popular structures in the market, we'll use mostly call warrants as examples in this session today. So a call warrant, what do I mean when I say a right to buy a share at exercise price at maturity? That means at maturity, this is a simple way to show you what you will get at maturity, right? The market price at maturity minus the exercise price divided by the exercise ratio. Now, keep in mind that in call warrants, if the formula that is shown on screen here is less than 0, that means the market price is below the exercise price, you don't lose any additional money. The settlement is 0, right? So this very simple example, just to highlight how it is at maturity, is when market price is, let's say, 150 and your exercise price is 1 ringgit and a simple exercise ratio of 1, your settlement is 50 cents, which is market price minus exercise price. Now, how do you derive the value of a warrant before expiry, right? So before expiry, the value of the warrant is generally a function of what the expected price at expiry is. So if the share price is not expected to move at all, and the current price is also 150, then you will see that the warrant value is 50 cents. If it's expected to move, then your warrant value will fluctuate depending on market expectation as well as the volatility of the shares. Okay, so then the next question I think most investors have always asked is, what is the benefit for investors? Why buy a warrant? If it moves in tandem with the mother share, why buy the warrant? Why not buy the mother share? Now, this is the biggest benefit for investors when it comes to trading structured warrants. And a lot of people go to great lengths to get this specific benefit in many other ways, which is leverage. Leverage on mother shares is the main benefit for structured warrants. What does that mean? That means when you might make a profit with a mother share, your profits with a warrant is amplified if you put in the same amount of money. But of course, you have to beware, because when it comes to leveraging, it's a two-way street, right? If you get bigger profits when the share price goes up, what happens when the share price goes down? You also get bigger losses. So investors should be very careful when it comes to using leverage in general, not just on structured warrants. Okay, so what is the power of leverage and how can it help you as an investor? Now, let's just take a very simple example today, which is Maybank, the biggest market cap share on Bursa Malaysia, right? Everybody knows Maybank. So let's say today's market price of Maybank is 8 ringgit 60 cents, and you want to buy 1,000 units. That will cost you 8,600 ringgit. Now, if the share price moves up to 8 ringgit 88 cents, that is a 3.26% gain, or 280 ringgit in short, right? Now, what happens if you buy a structured warrant to replicate this exposure instead? So in recent history, or actually we still have it, Maybank C1C warrant, which is something that we issued. Okay, so when Maybank's shares are at 860, the theoretical price of the warrant will be 8.5 cents, which is the price that the market maker, us, will be bidding and asking at the market, right? So to gain the same exposure, you need to buy 14,000 units of Maybank C1C warrants, which costs you 1,190 ringgit. Now, this is a much smaller capital outlay to the 8,600 ringgit you had to spend to buy the mother shares. Now, if the share price goes to 8 ringgit 88 cents, the price of the warrant will move to 10.5 cents. Okay? And for this number of this 14,000 units of warrants that you hold, your profit will be 280 ringgit. Now, if you look at this example here, the gains is exactly the same. But on the other hand, the capital outlay is a lot smaller. So what is this? This is the power of leverage. Okay? So if you want bigger profits, you can also spend 8,600 ringgit to buy the Maybank C1C call warrants, and of course your profit will be multiplied by multiple folds as well. Now, generally when you do leveraging structures on the market, or let's say, take a loan, margin financing or something like that. When it comes to the downside, your downside is also a lot bigger. However, when it comes to structured warrants, you can get leverage, but with lower downside. Now, you may be asking, leverage with lower downside. Generally not possible. But let me give you this example. The same example as we had earlier, Maybank trading at 860 and you go in for 1,000 units. So 8,600 ringgit. If it drops by half, now remember, I understand that Maybank is very unlikely to drop by half, but for any other shares on the market, right? But this is just an example. If it drops by half, you will lose 4,300 ringgit mark to market. Now, what happens to the call warrant? If the call warrant, if the Maybank shares drops to 4.30 ringgit, the call warrant, even if it's valued at 0, your maximum loss is 1,190 ringgit. So do you see how using a structured warrant to replicate an exposure can also protect you from the downside, where your loss on buying the mother share will cost you half your investment, but on buying the structured warrant, although it costs you your whole investment, the capital outlay is a lot less. And structured warrants is possibly the only leveraging structure available to most people where the downside is capped and there's no margin calls. Okay? So just to give you an example of how leverage can help you either gain more exposure with the same amount of money, or possibly also reduce your risk at the same time if you want to. This is just an example of the historical chart of Alibaba. Alibaba is 9988 Hong Kong. That's their stock code in case some of us are not aware. And Alibaba C26 is a structured warrant that RHB has issued previously, and it's still on the market. In fact, very hotly traded in the past few days because of the Chinese market spike. Okay, so let's take a look at the historical performance of Alibaba C26 against the mother share. Now, in gray here, this is the mother share, or blue, I think. Yeah, blue. And in red is the Alibaba C26 structured warrant. Now, you can see if the mother share goes down a little bit here, the warrant goes down by a lot. Now, as the mother share moves up, the warrant price goes up by a lot as well. So the leveraging factor here gives you a bigger downside as well as a bigger upside if you buy the same value of both. Okay, and then you can see as Alibaba comes down in value, the structured warrant also comes down a lot faster. So leveraging is a double-edged sword. You can get more, you can also potentially lose more. But if you know how to use it wisely, it can be something that can help you manage your portfolio a lot better and generate positive returns, or what they call alpha. Now, a few things I want to highlight, things to look out for, pitfalls of trading structured warrants that we see are very common mistakes that some investors make. Now, 3 things that is very important when you want to trade a structured warrant: the expiry date, the sensitivity of the structured warrant, as well as a common misconception on the liquidity of structured warrants. So let's quickly go through these 3. Now, first of all, expiry date. Let's take a look at this warrant, example warrant here. The exercise price is 1 ringgit. The current market price is 80 cents. And today is the 26th of July. The expiry date is on Friday, 28th of July. Warrant price is 1 cent. Now, not a lot, but some investors sometimes, they think that the cheapest warrant is the one that could possibly benefit the most, right? Yes, the upside is a lot greater, but don't forget that usually is a reason why some warrants are very, very cheap. Now, let's take a look at this example of a 1 cent warrant. And our friend here is wondering, wow, so cheap. He should buy 10,000 ringgit of this warrant and hope that it performs. But one thing he didn't check was the expiry date. Now, what happens then? Now, this is definitely not the right strategy unless you really want to take the risk, because in order for you to get any returns on your 10,000 ringgit, you need the market price of the mother share to move by 25% in 2 days. Now, up to your expectation on the shares, of course, it has happened before. but it is unlikely. So assuming the market price doesn't move anywhere, and we went through the formula of what you get paid at maturity. What is your settlement at maturity? You buy it today for 1 cent, 10,000 ringgit. You get a lot of warrants. But what do you get in 2 days when it expires? 0. So look out for the expiry date of a warrant. Make sure if it's a warrant that is not in the money, meaning that the share price is below the exercise price, make sure that there is a reasonable amount of time left to expiry for the share price to move in a positive direction so that you can benefit and make bigger profits. Okay, so first pitfall, always look at the expiry date of a structured warrant. Now, how do you do that? RHB has a website, what is it called? RHB Warrants. Just put it into Google and you will get it on the first one. It's warrants.rhb.com. Now, we have a warrant search function that is very powerful. You can check the expiry date of all structured warrants on the Bursa Malaysia. Now, just to give you an example, if you go into the warrant search function of our website, you can even just click here and click on all issuers. You can see every single structured warrant available on the market, because this information about expiry date is generally not available in most trading platforms. So always check when the expiry date is. This is very important so that you avoid losing all your money. Now, the second one, warrant price didn't move when the mother share moves. Now, we've seen a lot of cases where, you look at the mother share moves, hey, it's gone up by X amount. How come my warrants didn't take off and how come I didn't make money? Is somebody cheating my money? Okay, let me explain. So some warrants generally have this thing called sensitivity. Now, in this case, Alibaba C26 has a sensitivity of 23.3 ticks. And don't forget that Alibaba shares, 1 tick is 5 cents. So for it to move, the shares has to move by 23 ticks before your warrants move 1 tick. So this guy here, he's back again, confused, wondering why his Alibaba shares moved up by 20 cents, but the warrant didn't move. He's very confused. Now, like I said, sensitivity is 23.3 ticks. So what does this mean? This means that based on, let's say Alibaba is traded at $90.05, 90.10 bid ask, right? Let's say it moves 20 cents. Now it has to move all the way up to the 91.25 mark here before your warrant price moves 1 tick. Okay, so there is a fair bit of movement on the mother share required for this warrant before the warrant price moves. Now, every single structured warrant on the market has a different sensitivity. Okay, but you say, hey, why did Alibaba shares move $1 or $2 before my warrant even moves anything, right? At all. You must understand that also the power of leveraging, right? We mentioned just now. If Alibaba moves from 90 to 92.35, you're looking at maybe a 2+% return. But on the structured warrant, you're making a 12.5% return. So once again, the power of leveraging, because every tick that the structured warrant moves is a much more significant percentage gain compared to the mother share. So always look out for the sensitivity. Once again, this is something that we have listed on RHB's website. You can make use of it when it comes to your trading so that you know exactly where shares are going, warrant prices are going to be in relation to the mother share. Now, another powerful tool that some issuers, some investment banks have when it comes to trading structured warrants, which makes it very transparent for a lot of investors, is what we call a price matrix. How do you use a price matrix? Now, a price matrix is a very simple tool. It tells you exactly where the warrant's price will be, the bid ask put in by the market maker or the issuer when the mother share is at a corresponding price. So, for example, here you have Alibaba C26 and Alibaba C30, right? You can see that Alibaba C26 is less sensitive than Alibaba C30, which has a sensitivity of 12.3 ticks. Okay, so what how do you use this matrix, for your trading? Now that you know exactly where your warrant will be when your mother share price moves a certain amount up or down, you can automatically, at the start when you buy a warrant, know where your take profit level is when the mother share is at a certain price, or stop loss at the bottom. Okay, so make use of this tool. And let me just give a quick example on our website here, where you can just go into the warrant matrix and you can just search for, and on our website will be any of RHB's issued warrants. And for other issuers, you have to check on their website itself. Not all issuers have a matrix, I believe, but it is a very powerful tool that is available nowadays that makes it a lot more transparent and easier for warrant traders to know where their warrant price should be at. Now, thirdly, we are looking at liquidity. Now, this is a very common misconception in the market. BYD C22 in this example, traded volume 0. So our dear friend here is back and he's looking at this warrant and he says, oh, this warrant has no value, better not buy. This is it's a bit of a false impression. So why do I say this? Now, most people, or most of you guys, are very familiar with the share market. Share market, you are buying and selling from each other, right? There's no market maker. That means there's nobody providing the liquidity if there's no other investors buying or selling the shares. So you need liquidity in the market, existing liquidity in the market, to make sure that this counter that you want to buy, you can get out when you want to get out. Okay, zero traded volume. Now, this is a common misconception when it comes to structured warrants. And now, why do I say this? Now, every structured warrants on the market has a market maker to provide liquidity. Okay, so what do I mean by liquidity? Now, although the traded volume is 0, if you look at, well, when I did this slides, BYD C22 had a bid volume of 500,000 units and an ask volume of 500,000 units. That means although the traded volume may be 0, there is ample liquidity in the market itself when you want to buy or when you want to sell. This is what the market maker does. The market maker will be there to provide the bid liquidity and the ask liquidity, so that when you want to enter, there is liquidity. When you want to exit, there is liquidity as well. Of course, not all structured warrant providers provide the same amount of liquidity. So it's very important to know which issuer you're going for as well, and do they have a good track record of providing the necessary liquidity for the size that you're looking to trade. Now, just an example of BYD itself, there are other warrants on the market where you can see that the bid and ask volume is lower. So look at the issuer as well, look at their track record, make sure that they are generally always there to provide you liquidity when you want to enter and when you want to exit, because there's the worst thing that can happen to you is either it's gone up and you want to take profit, but there's no liquidity, you can't sell the warrant, or it's come down, you want to cut loss, and there's once again no liquidity, you can't sell the warrant. So that's not what you want. So look for an issuer that provides you that liquidity, that assurance that when you want to exit, they are there to buy the warrants from you as well. Okay. So next part of this, now that we've gone through the pitfalls, I hope that everybody here is a bit more aware of what you need to know when trading structured warrants, and you don't make common mistakes so that you can safeguard your asset values and not lose your equity when it comes to trading structured warrants. Now, next part of this is, can you get foreign exposure on Bursa Malaysia? Because you want leverage, but let's say you're looking at a foreign counter. Can you get exposure to that levered structure, the structured warrant on Bursa Malaysia itself? And the answer is yes, we can. Yes, so on the Bursa Malaysia, once again, when I did up this slides, not today maybe, but there were 859 structured warrants listed on Bursa Malaysia, with 135 of them being listed over foreign counters. So that means this same powerful tool, this structured warrants that you can use for leveraging, for lowering your capital outlay, limiting your losses if you are not buying the same amount, limiting your losses as well. You can use this on Bursa Malaysia itself to trade on foreign shares. Now, a vast majority of foreign warrants, foreign underlying structured warrants on Bursa Malaysia is over Hong Kong. Hong Kong warrants are by and large one of the most popular structured warrants in Malaysia. Now, why is that? Hong Kong shares generally have more volume, more news flow, more to the counters itself, right? In fact, I think just 1 or 2 days ago, a simple announcement from the central government in China of boosting the economy has boosted a lot of individual counters as well as the Hang Seng Index itself up by 3% in 1 day. Now, I remember 2 days ago, or was it yesterday? I can't remember exactly the day, where our Alibaba warrants, our Xiaomi, our other warrants, Hong Kong warrants were up by 30, 40% in 1 day. So if you buy the mother share, you may make 3 or 4% in 1 day. You buy the warrant, you can make 30 to 40%. So this is why we think that Hong Kong warrants are very suitable for a lot of Malaysian investors. First of all, trading hours are the same as Malaysia. That means that you can observe the live prices in Hong Kong as you trade the structured warrant in Malaysia. Secondly, once again, news flow, a lot more dynamic. So you get exposed and leverage as well, of course. So you get exposure to this market that is, in a sense, more volatile as well than Bursa Malaysia, which is primarily the markets that you want to trade a structured warrant in. Now, how is Hong Kong warrants different from regular structured warrants issued in Malaysia? How to trade it, right? So to answer the first question, how to trade Hong Kong warrants of our confused friend here again. How to trade Hong Kong warrants? Well, you can buy and sell Hong Kong warrants on Bursa Malaysia with your regular trading account. No special account needed, nothing. Just your regular trading account that you already have. You can use it to buy Hong Kong structured warrants on Bursa Malaysia. This is, of course, the same for all structured warrants. You don't need a special account. You just need to know which counter you're looking at and which warrant you're looking at, and you can buy it. But once again, most trading platforms, they won't provide you with all the details of the warrants, expiry date, and things like that. So do check the websites. Do check our website so that you get the full information of which warrant you want to buy. Is it different to local warrants? Short answer is no, there's no difference. The structure is the same. Everything about it is the same except the underlying. Now, of course, the only difference between foreign or Hong Kong structured warrants compared to local or Malaysian structured warrants is the mother share is listed overseas and you have that small element of FX. The FX is rebalanced as and when it moves as well. So that's about it. But Hong Kong warrants listed on Bursa Malaysia are priced in Ringgit Malaysia as well. So no currency conversion needed. But then again, the next question is, why don't you just buy the shares in Hong Kong directly, right? Nowadays, a lot of you guys, I believe, are very sophisticated investors. You know what you're doing and you know how to buy Hong Kong shares directly. Now, firstly, generally transaction costs to buy counters on Bursa Malaysia is cheaper than buying on a foreign market, generally, of course. Also, your lower capital outlay, because you generally spend less money, less capital to get the same exposure using a structured warrant, will also dictate that your transaction cost will be lower because the brokerage and whatnot is a percentage of how much you trade, the value. The second advantage of trading Hong Kong warrants instead of buying the shares directly is, and we covered this earlier in the session, leverage. Leverage on Hong Kong shares. This is what you get with Hong Kong warrants on Bursa Malaysia. Bigger profits, of course, potentially bigger losses as well. And it's probably one of the few avenues that most people can obtain leverage on Hong Kong shares currently. Which Hong Kong warrants do you want to trade? How to choose a stock? Well, this one will apply to any stock, not just Hong Kong warrants, any warrant, okay? Now, first step, there's a lot of structured warrants on the market, 135 in fact, listed over Hong Kong counters. You got Xiaomi, Alibaba, Kuaishou, Tencent, BYD. almost anything you can think of, right? How do you decide which one is right for you? So step one, know which counter you want to trade. Similar to trading shares, you need to know and understand what the company does, why you want to trade the counter, and how does it move. Understand the mother share. Understand what affects the price movement. Understand how certain news flow will impact the share price of the counter that you're looking at, and identify why do you think that there's going to be a movement in the near term. Because once again, we mentioned just now, always check the expiry date of a structured warrant and know that you want to take profit within a shorter tenure, not to wait till expiry generally. Okay, so because of that, you're looking at a shorter tenure of trade, you want to make a profit. So always identify why you think there's going to be movement in the mother share in the near term, so that your structured warrants will make you a good profit. Now, this is the same for Hong Kong warrants, it's the same for any structured warrants. Always know why you're trading it. But it's generally unadvised to just hear someone else trade it and say, oh, I also want. That's a very common thing that a lot of people do, but know why you think the mother share will move before you trade. Basically, know why you want to make the trade. Yeah. Step two, you already know which Hong Kong shares you're looking for, but which warrant do you want? For the same counter, there may be many different warrants. Now, compare all the available warrants. How do you do that? Now, if you look at our website here, earlier I showed you the warrant search function. Let's say you're looking for Alibaba. Alibaba RHB has 2 warrants, but you can just click on all issuers and you can see all the structured warrants, which is quite a few, listed on Alibaba shares and traded on Bursa Malaysia. Now, you can see that all of this have a different details, different terms within the warrants itself, different expiry dates, different sensitivities, and different leveraging ratios. Okay, so once you understand all these, you can choose the structured warrant that fits fits your view on the shares, fits your expectation on where the share will move. Now, if you think the share will move, let's say maybe $1 or $1 up, okay? Taking a structured warrant that has a sensitivity of 62 ticks, which is $3 before your warrant price moves, might not be the best strategy. So compare the terms of all the warrants on the market and know which one suits what suits your expectation the best, suits your trading strategy the best. There we go. Identify which warrants best suits your trading strategy. So once you have figured out which warrant suits your trading strategy the best, make sure you're comfortable at the prices that you're entering into the structured warrant. Not just the structured warrant price, but the mother share price. Because sometimes, some shares generate a lot of hype over the near term, right? AI shares or something. Now that's the big thing. Previously it was ESG, or previously it was tech as well, right? So all these shares can shoot up in price. Now, make sure that the price that you want to enter at is a price that you're comfortable with, and you believe that, or you think that there's still upside. There's a reason why you think there's upside, and make sure you're very clear about that. Okay. So then, now you've already identified your counter. You've identified which warrant you want. Now what? Step 3. There's no step 3. You know which one you want, which counter you want, which warrant you want. The only thing to do is buy. Okay. So thank you very much, everyone. Look forward to taking your questions. Please ask anything you want, and happy trading. Shane?
Yes, thank you so much, Andrew, for sharing with us the essentials of warrant tradings and how do you gain exposure to the Hong Kong market with locally listed structured warrants. All right. So if you have any questions for our speaker, please write them in the Q&A box. So we'll, not the chat box, so write them in the Q&A box so we can address your questions accordingly.
So just to let you guys know, I actually finished a bit quicker, so I want to take more questions from you guys. because I understand that I can't answer everything that everybody wants within the presentation. So anything you don't understand, anything you want to know, please ask. I'm here to answer your questions today.
Write your questions at the Q&A box here. So the first question is, normally, what is the cost like for trading warrants?
So, okay, so this is quite a simple one. The cost of trading structured warrants. Now, generally speaking, or not generally speaking, actually always, structured warrants are traded on Bursa Malaysia like any other listed shares. So your brokerage, stamp duty, and all that stuff, those are your general transaction costs, and that depends on your broker. Now, there's no additional cost to except to what your broker charges you, basically.
All right. Thanks for answering the question. The next question is by Tan. Is RHB issuing Hang Seng Index structured warrants?
Is RHB issuing Hang Seng Index structured warrants?
Yep.
Hang Seng Index structured warrants, no, RHB is not issuing.
Okay. Will you consider issue one?
We are considering. Considering. Yeah.
All right. Thank you so much. The next question by Heng is that, what is delta? How do we use it? Now we know structured warrants come with a lot of Greek symbol, right? And one of it is
yes. So structured warrants does come with a lot of Greek symbols, and it can be very daunting for a lot of investors. This Greeks, if some of the more technical ones of us here would know, it derives from the Black-Scholes formula, which is an option pricing model. So delta is basically the ratio of change of a structured warrant in relation to the underlying asset's price. Yeah, so that means that how much the warrant's price would change in relation to your mother share.
All right. Thank you so much, Andrew.
How to use it? How to use it? Now, this one is a lot simpler. Don't use it. Use the price matrix. It's a lot more foolproof. It's a lot more foolproof. When the share price moves a certain place, we tell you exactly where the warrant price would be. No need to calculate it yourself. Use the price matrix.
So the price matrix is the results of all the...
There are many factors when it comes
algorithm of the Greek symbols.
There are many factors when it comes to pricing a structured warrant, or to find the value of a structured warrant, not just delta, of course. Delta is one of it, but if you really want to know everything there is to know about structured warrants, we also have a very good informative education section on our website. But if you want the short answer, just use the matrix. It tells you exactly where the warrant price will be when the share price is at a certain level.
All right. So the next question by Suhaimi is, can you go through again the way to determine the warrant sensitivity? Okay, so the warrant sensitivity once again is well, not too dissimilar from what we just answered, right? In terms of movement of warrant prices, it's derived from that same Black-Scholes formula, which I think if I go into detail here, a lot of people will fall asleep. So, well, sorry, what was the question again? Yes. Warrant sensitivity. How do you determine? Okay, so warrant sensitivity is determined by pricing the warrants in relation to the share price at many different levels. So what we do is at every theoretical level of the share price, we use that formula to price out what the warrant is. Okay, and for a lot of the warrants, when your share price moves 1 tick, 2 ticks, we see that through the formula, the warrant price doesn't change yet, because warrant 1 tick sometimes, it's only 3 decimal points, right? When you trade on Bursa Malaysia or any exchange, in fact, 3 decimal points would be the maximum you get. And the change in the warrant price is beyond that, beyond the 3 decimal points. So your actual warrant price that you see on market won't change. And that is why it takes a bit more movement in the mother share price before it flips to the next price. And that is why there is this thing called warrant sensitivity. Now, if we put out the actual numbers in 10 or 15 decimal points,
you will see a change, but because it's 3 decimal points, it takes a while before it flips to the next price. This is called a flipping point. Yeah.
All right. Thank you so much, Andrew. The next question is by Vivian. Could you share with us what exactly is effective gearing? And how is effective gearing different from gearing? Is it important?
So effective gearing is basically how many times more leverage, how many times more P&L, profit or loss that you get compared to the mother share. So let's say effective gearing is 5, your mother share will move by 1%, your warrant price will move by 5%, your mother share move by 5%, your warrant price move by 25%, and so on and so forth. Okay. So effective gearing basically how many times more returns you get, up or down. Yeah. So if it's down 5%, you lose 25. You're down 1%, you lose 5. It's both ways. So that is what effective gearing is. And the next question is,
how is it different from gearing?
How is it different from gearing? Effective gearing is calculated based on a live warrant price, basically. So effective gearing is basically based on what the current share price is and the warrant price. Now, effective gearing changes as your share price and your warrant price moves. So the more in the money your warrant is, that means the higher the mother share price is above the exercise price, the lower your effective gearing is generally going to be. So it's a dynamic number. And is it important? Right. Yes, it's very important. You want to know how many more times returns you're getting, right? So yes, this is one of actually the most important, one of the more important terms that you will need to know when it comes to trading structured warrant. That's a very good question. You can choose whether you want a highly geared warrant or you want a lower geared warrant. Now, also, just to go on a little bit about this, the higher the gearing of a warrant, generally speaking, not all the time, generally speaking, the higher the gearing, the less sensitive it is. Okay? Generally, not all the time, but just in general, know that if your gearing is very high, usually your sensitivity is also very low. That means your mother share needs to move a lot before your warrant moves one tick.
Yep. So if you see that the mother share don't, the warrant price don't move that frequently as the mother share move, then it could be a warrants that is highly geared lah. So the more effective gearing that you choose, then the more risk that you take. Of course, correct. If you get the direction right, then you can get the higher return.
Correct.
So the next question is, can RHB provide daily support and resistance on Hang Seng Index in RHB Telegram? I think this will help investors to make decisions on how the market move to trade in structured warrants. So this is
currently we don't have any Hang Seng Index warrants. So I would say right off the bat is unlikely. But if we do have Hang Seng Index warrants, then in the future, then yes, this is definitely something we'll look into. We do have individual shares, Hong Kong shares listed. So if that is something that will help, we can do something. We can look into doing something like that, more technical analysis a bit regularly. Yeah.
All right.
We'll definitely look into it if it helps.
Okay. So the next question is by Surya. Is it a good idea to hold Hang Seng Index warrants until near expiry date? I found that the value keep fluctuating high and low.
Well, the value fluctuates because the Hang Seng Index also fluctuates, right? Now, whether you should hold it till near expiry, this is a concept called time value. Okay, every warrant has a time value into its price, built into its price, and generally speaking, or not generally speaking, actually, all the time, your time value decays as your warrant gets closer to expiry. Now, the closer you get to expiry, the faster the time value drops. So if you say, should you hold a Hang Seng Index warrant until it's very near expiry, I can't answer exactly for your specific case, but in general, I would say that holding a structured warrant till close to expiry, makes you lose quite a fair amount of time value.
Right. Thank you so much, Andrew. The next question is by Davy Hong. How do we calculate the warrant leverage ratio?
Leverage ratio as in the effective gearing, I presume. You want to know how to calculate. So you can, well, on our side, we have a whole system that actually calculates, like the matrix just now, we have a whole system that calculates where the warrant price is in relation to the share price and yada, yada. And from there, we can derive what the leverage ratio is. But if you don't mind me, let me share this screen for a moment. On our website here, instead of having to calculate it by yourself, in our warrant search function, the effective gearing is actually just literally listed down on all the warrants on the market for you guys. So just go to the website, you have the number. It's a lot easier. Yeah.
All right. So refer to the issuer's website. Okay, usually they display that.
Oh, you don't even need to refer to the issuer's website. Our website has a effective gearing for all warrants, even not ours. So you can just use our website also.
Okay, sure. The next question is by Ilman. Can you explain about premium? Because I think
about premium.
People always think that premium shows that how much money that issuers are making, right? And it tells us like how cheap it is.
Actually, the premium has close to nothing to do with how much issuers are making. In fact, so premium, we spoke about a bit about it just now on the other question where we talk about the time value of a warrant, right? The time value comes from the uncertainty that you have up, from the current share price up to expiry, where the warrant price would be then, right? So it stems from the time. It's called time value because it stems from how much time you have left for the share price to fluctuate and hopefully fluctuate in the right direction. Okay, so what was the question again?
Premium.
Premium, right? So premium is generally a sort of a fixed hard number, not percentage, but usually it's displayed as a percentage. So when your warrant is very far out of the money, you'll see that your premium is very high, okay? Because most of the value of the warrant is in the fluctuation, the potential movement of the share price instead of the current share price, right? Let's say if your warrant exercise price is 1 ringgit, your warrant price is 120, you have an intrinsic value built in of 20 cents, right? Whereas if it's out of the money, your intrinsic value is 0. So, basically close to 0. So the time value of a warrant is basically how much fluctuation you can have left before the warrant expires. And it's usually a fixed number. So when the warrant's out of money, your premium will look like it's very high. And then when the warrant's in the money, your premium looks like it's very low. Okay. So, or as a percentage of the warrant price, it looks like it's very low. So when you look at a premium from a percentage point of view, now this is one case that I've heard of before, they said, oh, I bought a warrant. When I bought it, it was like 60% premium. Then the share price shot up, the warrant price shot up. How come my premium only 11% when I sell back to the issuer? Is the issuer cheating my money? No, that's not the case. It's because your premium is a hard number, right? Let's say it's 5 cents or 10 cents, right? If the share price shoots up, it's still 5 cents, but your warrant price goes from, let's say, valued at 10 cents to valued at 30 cents. You've made a lot of money. That 5 cents is a much smaller percentage.
All right. Thank you so much, Andrew, for addressing the question. The next question is, why are there so few put warrants in the market?
Why are there so few put warrants in the market? That's a very good reason, actually. So as a issuer of structured warrants, banks generally don't take much directional risk. So, share price goes up, we are usually on the back end, we are usually hedging our positions, right? So we don't make money when share price goes up, we don't lose money when share price goes down, or we don't make money when share price goes down either. Okay, we're usually quite neutral to the market. So the reason why there are very few put warrants on the market is because in order to sell you a put warrant where we have to pay out returns when the share price goes down, right? We need to be able to short the share. And the ability to short the shares currently is not as widespread as I would like. So that is why there's a lot less put warrants compared to call warrants on the market.
I see. Okay, that's
Yeah.
why I think it's easier to do put warrant on index because you can short it through futures, right?
All right. So that's why you see put warrants on indices, but less so on individual stocks. Now, sometimes a lot of the put warrants that you see available on the market is because issuer already has a long position on the mother share elsewhere, and they have excess shares. So they can just basically borrow from themselves to short it. That's why you can issue put warrants.
Okay, understand. The next question is, how is structured warrant different from company warrants? Which one should we trade?
Okay, so structured warrants and company warrants. Very good question. Company warrants are from the company itself. Let's say if TNB's company warrant is issued by TNB itself. You can buy TNB company warrants if you want, or you can buy structured warrants if you want. Now, what's the difference, right? In a company warrant, you at maturity or when you exercise it, you actually have to pay the money to buy the mother share, and you actually receive the mother share. Structured warrants are issued by investment banks or issuers, not necessarily investment banks, but they are cash settled. So remember just now in the slides, we had the settlement price calculation thing. Let's say if that was a company warrant, share price is 150, exercise price is 1 ringgit. When you exercise it, you don't just get the 50-cent gain. What happens is you have to pay 1 ringgit to buy the share, and the share will be put into your account. Then you have to sell it at 150 to get a profit if you can sell it at that price. And also one of the key things is structured warrants issued by the issuers generally have market making systems. So we are here to provide liquidity for traders, basically.
All right. The next question is, what is the market maker criteria to issue structured warrants for new IPO counter, like DXN with short history trading days?
There is a criteria. It's based on the IPO size. I think it has to be above how many billion? I can't remember the exact number, but if not even 3 billion, I think. So basically, the market cap at IPO has to be above a certain level. Then only we can issue it, earlier. Otherwise, we have to wait till the mother share hits all the necessary criteria for a standard warrant.
That means if it's issued together with the IPO debut, it's going to be the same day, right?
Same day trading or next day.
All right.
But in order to do that, you need the IPO to be of a certain size. I can't remember the exact number, sorry.
All right. So the next question is by Kartina. Where can we see the sensitivity of the warrant? If the warrants are issued by the mother company itself, that means the company warrants, can we see the sensitivity?
Short answer, no. You can't see the sensitivity. Although I would say it's less important for company warrants, because in structured warrants, the prices are dictated by, not dictated, but the prices are generally, when the mother share is at a certain price, the corresponding warrant price is sort of formula driven. Okay, so the market maker provides the liquidity at that set price. When the mother share is, let's say, 1 ringgit or 2 ringgit, the warrant price will be exactly this and this, and market maker will bid and ask at that range, so that there's liquidity in the market. Now, on the company warrant, that system may or may not be there. Generally not, I believe. Generally not there. So what happens is, even though you can find the sensitivity of the warrant, the price is still dictated by market movements. So it's less important in a way.
Yeah. So if you, essentially what Andrew means is that if you trade company warrants, the price of the company warrants is subject to the market forces, the supply and demand dynamic. Okay, there's no market makers who is going to make market for you. So you could be trading at a premium or it could be trading at a discount. So it just depends on what the market think the company warrant is worth. But for trading structured warrants, it is essentially the market makers will try to ensure that they're market making it at a fair price to you.
Yes.
So it's very formula driven.
Yes, exactly.
Unless the inventory is sold out.
Well, yes, but then even if inventory is sold out, if you want to exit, the market maker will still be there to bid.
Yep.
Yeah.
Just that when you buy, then you may not be able to buy at the fair price lah, determined by the formula. You could be buying from a third party who is a third party seller who is selling his or her structured warrants to you.
Correct. And if you want to know what the fair price is at any value, once again, price matrix, please use it. A lot of effort was poured into creating it.
Okay. Now, Andrew, I realized that sometimes when the warrants are not fully sold yet, but it's indicated fully sold. So why are the issuers keeping some inventory?
I can't answer for every issuer, but there are times when, there are reasons why the issuer cannot sell any more of the structured warrants. Because at the end of the day, we are all banking institutions, we're all regulated. So there are cases where, just as an example, I don't know, let's say another part of the bank needs the limits to do some kind of corporate action, or maybe the bank is involved in a corporate action, right? Then if that might create a conflict of interest, the bank obviously won't, knowingly enter into a position where there's a conflict of interest. It could be. There are many reasons why, but it's just one example that could be the case.
All right.
So although I still have inventory, but if I have knowledge that somebody else is doing a corporate action within the bank, there's a directive to say, okay, no more trading this one, then we can't.
All right. Now we also understand that most structured warrants have exercise ratio, right? So is there a reason for exercise ratio? Is it to keep the warrant price cheaper?
Yes, in short.
All right. The next question by Stefan is that does higher premium of warrant cause a higher theta decay of a warrant?
This is a very good question. I've never actually checked back against it, so I can't answer this question right now. Yeah, I need to go and check back against it.
It is a very technical question.
Maybe on your next session, you can have the answer for them.
Yeah,
don't forget to join and sign up for the next webinar. Shane will have the answer for you.
Not me. Definitely Andrew. Hey, not that qualified. You are a warrant specialist.
I'll give the answer to you.
Okay. So come back for the next session with Andrew. So Andrew will address this question. Okay, it is very incredibly technical, so may need some time for him to get the answer. All right. So Jaime would like to ask, appreciate if you can go through the concept of exercise ratio. What does it mean, an exercise ratio?
Okay, let me go back to what's going on. Okay, can everybody, you can see the screen here, right?
Yes.
Now I got to go all the way back to this. Okay, so if you look at this here, the exercise ratio is at the bottom of this formula. What does that mean, right? It's essentially how many warrants, for purpose of calculation, how many structured warrants you need to convert to one mother share at maturity, right? So let's say in this example we have here, you're talking about market price is 150 at expiry, exercise price 1 ringgit, and your exercise ratio is 1 times. So if you put into this formula, you get 50 cents per warrant, right? Now, if the exercise ratio is 2 times and you put into this same formula, you're getting 25 cents. That means you need 2 warrants to convert to 1 mother share, theoretically. But of course, everything is cash settled, so it's calculated into cash and the settlement is made in cash. So if it's 1 times, it's 50 cents, 2 times, it's 25 cents, and 5 times, it's 10 cents, and so on and so forth. That's basically what it is.
Okay, so the objective is to make it more affordable to retail investor, right?
Yep.
The next question is by Kok Long. If the underlying price is in the money, will the time decay become 0?
No, time decay will still be there. Like I said just now, time decay is a fixed ringgit value. Okay, so that decay is still there, but it affects the warrant price as a percentage less if the warrant is in the money. As a percentage, the ringgit and cents amount is still the same.
Yep. But remember that the time decay is steeper closer to the expiry date.
Yes. So always check
Uh,
that expiry date.
yes. The next question is, if the underlying asset is in PN17 or the trading is frozen by Bursa Malaysia, so will the structured warrants also be held on hold?
So generally speaking, PN17 we can't issue, right? Or even if we can, we generally won't because it's a bit too risky, we find, but we can't. And if it's an existing outstanding structured warrant, the exact procedure, I'm not exactly sure, but I believe we will stop selling. So, the cases like you said just now where you still have inventory, but you don't sell. This could be one of the reasons as well.
Okay, if the company you issued structured warrants on suddenly becomes
it could be a reason why, we still have inventory and we don't sell, for example.
All right.
Mm.
So the next question is implied volatility important? Does it tell us like how cheap the warrant is?
Cheap in an absolute amount, no, it won't tell you that. But cheap in a percentage amount, it might. So generally, the more volatile a warrant is, the more higher the implied volatility, the more volatile it is, the higher your time value. Because remember, your downside on a structured warrant is capped, your upside is unlimited, right? It's capped to the amount you invest, upside is unlimited. So the more volatile it is, although it may be up or down, but the movement is greater, and up is uncapped, down is capped. So the more volatile the implied volatility is, the more expensive in dollars and cents your time value, your time value is on the warrant. Yeah.
All right. The next question by Surya. Which warrant is safer or better to trade? Is it company warrant or the Hang Seng Index warrant? What are the differences?
Let's look at these two warrants. Yeah, Hang Seng Index and company warrant. Company warrant, first of all, generally we answered just now, no market maker, so you take that risk. First of all, Hang Seng Index warrants, there is a market maker, and it's a structured warrant. Now, which one is better to trade? Now, remember just now we're talking about how to choose a warrant, which one you want, know why you're trading, understand the counter. Any counter can be traded, right? Any counter can be traded, and you can make a profit from it. Potentially, not always. But more importantly is knowing why you want to trade that specific counter. So whether a company warrant is better to trade or a Hang Seng Index warrant is better to trade, only you can have the answer. Because it's up to you what exposure you want. Do you want exposure to the company? Do you want exposure to Hang Seng Index? Okay. So it's up to you which one suits your portfolio, suits your investment requirements better.
All right. So depending on your view and your appetite. The next question is by Tiong Sun. Are structured warrant prices always dependent on its underlying share and, for example, its market sentiment?
Yes, absolutely. Structured warrant values are, because, structured warrants is a derivative, which means it derives its value from something else. And in structured warrants case, it derives its value from the mother share. So it's 100% reliant on the mother share.
All right. The next question is by Lim. So generally, when interest rate goes up, will warrant price goes up?
I think this was a very it's been similarly answered with the previous question. Structured warrants prices are derived from the mother share, right? So if interest rates goes up and it causes the mother share to go up, like let's say banking stocks, right? If interest rate goes up, people generally see it as a positive for banking stocks. Bank prices goes up. If you have a warrant over a bank share, then that value will go up. So it will entirely be dependent on if the mother share that you a mother share of the structured warrant you're looking at is positively correlated to interest rates or inversely correlated.
But I understand from the pricing model that there are some element of interest rate that's embedded
Correct.
into the
There's an
formula.
element of risk-free rate, but one thing I can say for sure is the movement of a share price, because interest rates, when they move, they're moving like what, 20 basis points, 25 basis points, 50 basis points, right? The value of the shares movement is usually greatly outweighs that.
So the impact to that warrant price is very, very minimal in consideration in comparing to the movement
in the
market.
mother share. Yeah.
All right. So the next question is by Sue. I think considering everything else is equal, so between low premium and low volatility, which type of warrant should we prioritize?
Low volatility and low premium. Okay. Wow. Good question. Low volatility is, I presume volatility, you mean implied volatility lah. Yeah. So if it's low volatility, I would say it depends, because a warrant with a low implied volatility, let's say IV of like 20% or something, or 10%, very low lah, right? But if the mother share's actual volatility or historical volatility is even lower, it still might be very expensive, right? The cost, I mean, the difference in valuation lah. Yeah. So absolute low volatility is not so important, but more important is to compare the volatility with the actual mother share's volatility lah, so that your IV is not too far off. Low premium, if I were to trade structure warrants, I generally won't look at the premium at all. To me, it's not very, to me lah, it's not very important when it comes to trading structured warrants. So I would say more, which should we choose? If the volatility IV of the structured warrant is a lot lower than the mother share's actual volatility, then yeah, go for that one lah. That means the issuer has made a mistake somewhere.
All right, thank you so much, Andrew.
Yeah.
You talk about implied volatility just now, right? But sometimes I noticed that in the implied volatility column provided by issuer, sometimes it has NA not available. What does it mean?
Which issuer? Not available, they're not showing it lah.
In the list of the table, right? And in the table, there are a lot of the structured warrants. So some comes with NA, I have actually forgot which issuer it was. Yeah.
I'm not sure why
come
they
across
display
before.
an NA. I'm not sure why they display an NA, but it usually should be displayed. It could be something as simple as their website data feed was down and it didn't pull from the file correctly or something like that. But it shouldn't be NA lah.
All right. Yeah. You talk about premium just now, and it say that premium is not exactly that important to you as a warrant trader. But sometimes I notice that there are counters with negative premium. Can I explain that? Negative premium. It doesn't make sense, right? Because premium means time value of money. What does negative premium mean?
Negative premium. Let me see if I can find an example. Negative premium. What does it mean? Let's see. Like, I mean, honestly, to me, like I said, once I look at it, premium is not really something that you should be, or not should, but it's not that important when it comes to warrant trading. So personally, I've never looked very hard into premium. So I have not actually looked into why some warrants have a negative premium, honestly. It's a very good question. I'll answer in the next session.
All right. Thank you so much, Andrew. So be sure to come back for Andrew next section, okay?
All right. And be sure to sign up for the next webinar organized by Bursa as well.
Yeah. Adam asked the next question. What makes RHB structured warrant different or better from your competitors?
Okay, so every issuer is different, right? So on our side, I would say we try to be very transparent with investors. We provide you the price matrix, so you know exactly, and this price matrix is pretty much the same, is derived from the same system that our market making system actually puts in the bid and asks when it comes to trading on market itself. So it's very transparent. You know exactly where your warrants price should be at, first of all. Secondly, we always strive to provide deep liquidity in the market. That means we always strive to provide ample bid and ask so that investors who want to come in or want to go out, exit their positions, will be able to do so easily. So that is, to me, what we take pride in ourselves for. Of course, when it comes to choosing your structured warrant that you want, choose the one that suits your trading requirements best. Issuer is definitely one important factor to take into account. Make sure you go with one that provides all these things to you. Sufficient liquidity in the market. When you want to exit, make sure they are a warrant issuer with a good track record.
All right. Thank you so much, Andrew.
Yep.
Now, let's say I'm a trader with a slightly longer time horizon. Like I may want to trade it for, 1 month. And versus a trader who has a very short tenure when it comes to trading structured warrants, like a couple of days or less than a day, right? What are the criteria? What are the different criteria they should look at? Should they look at longer tenure trader? What are the characteristics they should look at? And shorter tenure trader, what kind of characteristics of warrant should they look at?
Okay, so I think for a shorter day, like a day trader or somebody who trades in 1 day or so, the time to maturity might be a bit less important to them because they know they're not going to hold to maturity. They're not going to hold to the end of the week, right? So do check the time to maturity. Make sure it's not like tomorrow or something, but less important to the day trader or the very, very short-term trader. I think what might be more important to the very, very short-term trader would be things like sensitivity, because share prices, they don't move a lot in a very short span of time, right? Generally, of course, if you expect something wild to happen, then by all means, but generally share prices don't move 15-20% in 1 day, or even 5% in 1 day is a rarity, right? So for that, in order for you to take advantage of structured warrants, I think you want to look for something more sensitive so that when the price moves a bit, you already make your profit and you can exit. That's what a shorter term trader will look for. And if you are longer term, let's say 1 month, 2 months, the first thing you want to look at, as always, maturity, right? You don't want to say, oh, I want to hold this warrant for 1 month, but it matures in 2 weeks, right? And a trader who holds a structured warrant for, let's say, more than for about a month or so, that kind of horizon, you will be affected by time decay. Okay, so of course, choosing a structured warrant that has a maturity much further in the future, because we discussed just now, right? Time decay gets faster, it accelerates the closer you are to expiry. So if you trade something that's 2 months to expiry and you're holding for 1 month, your time decay is going to be a lot more compared to somebody who's trading for 1 month where the expiry is 9 months away. So choose the newer warrant, or the warrant with a longer expiry if you're holding it for a longer period of time. All sensitivity will be less important because in 1 month, a share price moving 5% is perfectly normal compared to 1 day, right? So sensitivity less important.
So if you're a day trader, then high sensitivity warrant are
high sensitivity warrant will be more beneficial.
So now we learn how do we pick the warrants that are suitable for our trading style. So the next question by Sue is that, are newly listed warrants out of the money and high premium?
Are newly listed warrants out of the money and high premium? Not necessarily. Out of the money, I think that depends on the issuer, but usually the reason why is because if you put it out of the money, you get more effective gearing, right? In the money warrants, you're basically selling them. We're basically selling intrinsic value, which is not what people generally want at the start of a warrant. So usually slightly out of the money, so that you don't pay for the intrinsic value and you get higher leverage ratios. Second part was premium. Once again, I wouldn't look at premium too closely. It really does not to me, my opinion, to me, it doesn't mean that much when it comes to trading warrants.
All right.
More important than premium is knowing where your price would be as the mother share moves. Knowing your gearing, your sensitivity, these kind of things are a lot more important.
All right. Andrew, this might be a bit technical, but this comes from me. I understand that a warrant price takes into account of the forecasted dividends to avoid a fall in the price of the warrant if the mother shares fall by the dividend amount on the ex-dividend date. So if you do an inaccurate forecast, will it mean a downward adjustment to the warrant price the next day?
All right. Can you come again about the ex-dividend date thing?
Yeah. If you make an inaccurate forecast, will it mean a downward adjustment to the warrant price the next day?
So the warrant price. Okay, so just to answer that part, right? You remember
the dividend is part of the formula, right? Dividend part is part of the formula.
Remember just now we discussed about how the interest rate might affect the warrant price slightly, right? So dividend, if we expect it to go through an ex-dividend date, will impact the initial warrant price already by said amount. Now, the function of a warrant price when it's traded on the market live, during its life cycle, is 100%, not 100%, but it's primarily dictated by the mother shares price. So if the mother share price drops ex-dividend, the warrant price will follow suit now.
Okay, so the impact is very minimal.
I would say the impact on the original warrant price it's there, it's implied in the warrant price. But when it comes to the ex-dividend date, let's say the share price drops a bit, the warrant price will also follow accordingly. Of course, things like special dividends, corporate action, share split, all this will be the warrant prices will be adjusted or the warrant terms will be adjusted to make it fair. But normal dividends, no adjustment.
All right. The next questions come by Kok Long. Normally, when does time decay start affecting the price of the warrant? Is it 1 month before the expiry or 2 months, or when is the time that it starts to have impact?
Time decay starts immediately. It's just very slow. Okay. For every warrant it might be different, but generally speaking, the last 1.5 months has the greatest impact. Generally speaking, not for everyone, not for all warrants, but generally.
So the time decay get steeper closer to the expiry date.
The time decay, the value of your warrant is slightly down. And then as it gets closer to maturity, it goes down like that. So
the price matrix will change every day, right? Based on
price matrix is updated every 10 minutes.
Every 10 minutes it is updated.
Every 10 minutes, yes.
Is it the same across all issuers?
I can't speak for other issuers, but for ours it's 10 minutes.
So I mean the price now and 10 minutes later, it might
so just when you're trading the structured warrant, just keep one tab open for the price matrix and keep an eye out. But usually within an intraday, the matrix itself won't shift much. It's just the share price moving up and down where the warrant price would be.
All right. So it looks like there are no more questions on my panel. So we want to thank Andrew for doing this segment for us. Trading warrants in 2023, trick or treat. All right. Hope that all of you here have
hopefully it's trick lah. Hey, sorry, hopefully it's treat. Sorry, hopefully it's treat, not trick.
All right. Yeah. So hopefully it's a treat. So ladies and gentlemen, just heard from the warrant specialist from RHB Investment Bank, Mr. Andrew Lai.
All right. Thanks everyone for tuning in so late. Okay, I'll leave it to you, Shane.
Yep. All right. So for those of you who haven't checked out Bursa Academy, you may visit www.bursaacademy.bursamarketplace.com or scan the QR code to visit the website. So Bursa Academy is a comprehensive one-stop e-learning platform that aims to provide you with a continuous and holistic learning journey. On Bursa Academy, there are investing articles, investing quizzes, coursework, webinars, and even videos for you to read and understand and watch to understand about the products, strategies, the market, and so on. So you even can sit for a coursework to pass to get the qualification to trade leverage inverse ETF. So it's all in Bursa Academy. For next webinar, it is titled Penggunaan Screener dalam Kajian Fundamental Proses Mencari Saham. So the next session will delve deeper into fundamental analysis. How do we use it to find the right stocks? So it's happening on 31st of July, which is next Monday, 8:30 to 10 p.m. So if you want to learn about how to use fundamental analysis to find the right stock, please visit this link for you to register your interest in joining this webinar. So once again, I want to thank all of you here for tuning in until the end of this session. Hope that you gain enormous value in this session brought to you by Bursa Malaysia. And thank you so much to Andrew for speaking with us on this segment. So with that, thank you everybody, and hope to see you guys in our next webinar. Bye everybody. Have a great rest of the day.